Hello traders, today is the 29th of April. My name is Devil Hornsey, market analyst trading. And today we're looking at trading levels for the euro. Okay, we're going to start with the euro versus the US dollar on the daily time frame. We can see that yesterday's volume was pretty much equal to Monday's. And if you remember the Sunday night sort of news that Emmanuel Macron had regained power in the French presidential seat for another term, that was the good news for the sort of Europeans, but we can see here that the euro versus US dollar sort of sold off by 100 pips from 1.08 down to 1.07, and then it's continued to go another 200 pips, so 300 pips in total down towards the 1.05. So that's what happened this week in the euro versus the US dollar. We can see that the price action is now pushed and closed below the Bollinger Bands for a couple of days, sort of like Wednesday and Thursday. And then today, we're actually making a higher high and a higher low compared to yesterday's price range. So we're seeing some profit taking and maybe a reversion to the mean, but maybe also a reversion back to the 1.08 where we saw the actual breakdown, if there's any more orders left up there. Looking at the sentiment indicator on the euro versus US dollar, it was 70% this morning bullish. It's now dropped down to 68%. So we are seeing some of the sort of bullish sentiment sort of leave the euro versus US dollar. If that was to start going back up towards the 100, then I would expect this to carry on going lower. See if we can stop out that cohort of bullishness in the sentiment indicator on this platform. But at the moment, yeah, we're sort of seeing the euro versus US dollar sort of mean reverting, see if we can find some value, see if we can find some overhead resistance. Now, if we get back above the 9-period moving average, that would be a good signal that we could at least get to 1.08. Whether or not we can get back up to 1.13, which, if you remember, at the beginning of this year was the most sort of heavily traded level. So 1.13 was the pivot for the sort of point of control up until we got to sort of the Ukraine war. And then we've had another sort of sideways and high volume period between 1.1 and 0.12. So we could get all the way back up into this range, test the 1.1, take out this double top here that we can see at the top of these daily bars, and then collapse back lower. Now, if we go to the yields, we can see that 10-year yields for the US is just under 3, currently at 2.842. So they've probably priced in the rate hikes for this year. However, long-term inflation expectations are for 3% to be the sort of level of inflation coming down the pipe. So we could get these yields back above 3% as, you know, depending on how hawkish the Fed are. German bond yields are back above the zero line. You know, they have been since early March. So at the moment, the sort of yields between Germany, Europe, and the US are looking like they're going higher together, but there is still that differential. So looking for US dollar strength to maintain over sort of European and German sort of yields here. Japanese yen, obviously, all the way back down at 0.238%. Between 0 and 0.25 is where the Bank of Japan are going to keep this. So we expect to see the dollar versus the yen go higher for a lot longer too. And you can see here, pound, we're expecting the pound to be stronger than the euro in the coming years too. Like I said, we started off the week with the sort of French presidential elections. Then it became more of a worry that President Macron's party would lose the majority within the parliament. There's another vote in June, so we'll be expecting to see euro come under some pressure then, as there's obviously uncertainty around that. We've also got Ukraine and Russia still fighting in the east of Ukraine. Hopefully that gets resolved soon and the euro can sort of stop worrying about that. Going to the EURUSD.com for its heat map, we can see here that US dollar is the weakest today, and we'll talk about that in a minute. Euro is mixed. Bottom left-hand corner is starting to build green, though the Canadian dollar is, sort of losing some strength down to the movements in oil. Pound is currently the strongest currency, and the US dollar is currently the weakest. However, the yen and the Swiss franc are closely following the US lower, and so we're sort of seeing more of a flow out of the safe havens into more riskier assets. We go to the active trader platform and then go down to an hourly. We can see here that we've got price back above some previous swing highs on the intraday chart. So This was the 28th of April. This is currently the 29th of April. So we're above yesterday's highs we've sort of already discussed. If I just turn on, so this was the markups I made yesterday, trying to work out whether or not this is an accumulation phase for a bigger push to the upside, back up towards the 1.1, maybe up to the 1.13. We had, if I just put volume back on, we had some strong volume coming into the low here. So I added that as a selling climax with an auto rally, then sort of second test, and then a spring. So we had like more of an indecision candle here, but we had, you know, a positive reaction. So I'm saying that this higher volume sell-off was a spring. The fact that we now closed a couple of hours ago, you know, basically above the resistance levels, looking for this to be a sign of strength. Yes, we've just had a bit of profit taking. You can see that if I go down to a smaller time frame, we had this sort of triangle wedge forming. Some profit taking, you know, took place. We got back below. If we were to get back above the swing high, then we're looking for a, you know, continuation to the upside. And if I go to the Wyckoff distribution and accumulation phases, we can see here that if this was the support and the spring, we've had this move up, got back above resistance. We've had a sign of strength come in. Like I said, we had a close above the previous resistance. We've had some profit taking, and now we're looking to see if we get into the next phase, which is phase E. And if I just go down to phase E, it says in phase E, the stock leaves the trading range, demand is in full control, and the markup, it's obvious to everyone. Setbacks such as shakeouts and more typical reactions are usually short-lived. So we're looking for a big expansion to the upside. You know, we had this sort of compression, this accumulation. Now we're looking for, if you imagine holding a ball underwater and then just releasing it, we're waiting for this big pop, and we're looking to the left-hand side to see if we can start taking out some of these swing highs, and then, you know, using the stops for anyone that is short as a reason to go higher, and then see if we can get back up to this sort of trading range around 1.08, maybe up to 1.1. That's what I'm kind of looking at the euro versus US dollar at the moment. On the euro versus the Australian dollar, I initiated a short, as you can see here, based on the strategy I outlined earlier this week. We had popped through a previous swing high, rejected that, couldn't close above. Anyone that had been trapped essentially long on the 25th of April has now probably been stopped out. We've got this big move up on the 22nd of April here. So we're looking to see if we can get back below that to sort of confirm that we're in a seller's market. Everything's set up essentially for this strategy. So we had the 200 period moving average up here as a filter. So we're looking for shorts. We had a big push up in the Bollinger Bands. So above the upper bound, that sort of saw a close above there. So that's the actual setup. Then we had the trigger, which was the close back below the 9 period moving average. And that's kind of what we're looking at now. A risk reward of 1 to 2. So most previous swing high up here is where the stop loss is. Risk reward ratio of 1 to 2 means that we're looking for a test of 1.42 and below. The euro versus the yen could have had another setup to go long the euro versus the yen to sort of continue this trend. However, the Bollinger Band wasn't sort of tested on the lower side, so couldn't take a trade. But if we look at the Aussie versus the yen, similar sort of shape, but a deeper retracement compared to the closing prices before. So we actually saw the setup here on the 26th of April close, filter, yeah, all working, trigger, hence why we took a long trade on that. So that's kind of how I was expecting to see the euro versus the yen pan out, but it didn't quite happen. Euro versus the pound, that's setting up for a short. You can see we're in sort of this long, drawn out, grinding downtrend channel. So every time it gets towards the 200 period moving average, we can start to look for shorts. Currently, if we get a close below the 9 period moving average today, then that gives us another opportunity to come down and see if we can test the 0.825. Looking at economic calendar, we can see that Australian PPI is inflationary sort of data. French CPI is obviously inflation data. German GDP flash, so this is the initial reaction to GDP. And we can see that 0.2% was the figure. That's much better than a negative 0.3%. So German GDP initially is doing well for Q1. EU GDP flash preliminaries coming in below expectations and below the previous reading. Quite good for the euro. That should help boost the sort of German bond yields and European yields. Now, if we go to the US dollar index, so turning to the US dollar index, we're seeing a sell-off today in the dollar index. So we pushed up to the 104. We've taken out this 2.618 fib extension. Now I'm expecting to see a 4.236 extension get hit, which is essentially 106. So at some point in the future, I'm looking for US dollar to carry on going higher. And the target now is 106. However, because we've had a possible 5-wave move up, you see here the volume yesterday was really high. So maybe a climatic top, didn't quite get up to the 3.618 extension. So climatic top, lots of profit taking around a big figure. So I'm expecting to see a pullback back into sort of value, back into some sort of support. Here we can see that we've got this imbalance from 160 cents. So we could get a pullback into that. That's all the balls that have been in since December or before taking profits. Then we're looking to see if we get a break of market structure on another rebound on a weak sort of bullish move to see if the sellers actually step in. Up until then, we're looking to see a corrective move and then a sort of big push up, like I said, towards the 106. So that's what I'm looking at on the dollar. Hopefully everyone took profits. And if we go back to the euro versus US dollar, it'd be good to see a push up in the euro versus US dollar, just so we can initiate more shorts at a future date. All right, good luck. It's a long weekend for the UK. So trading will be quite quiet on Monday morning. So we'll be back to normal sort of trading on Tuesday. All right, take care. Have a great weekend. Speak to you next week.